Hi, good evening, everyone. I hope I'm audible. Welcome to our webinar on Malaysian election analysis and market outlook. And this webinar focuses on the current scenario of Malaysian equity market and the economic cycle during, of course, the election. That will be how it is, going to impact the overall market and how's the market looking. There has been lots of volatility that has come into the market and it's taken some good deep stop losses as well. So we start with some of the basic things, the basic statistics. So we'll look at uh, initially about how's the voting, what has been the percentage. Uh, I see many of you have many questions over here. So you please have a pen and paper as well with you. If you have any question, write it down, note it down. I'll come to you and we'll take that one by one. It can be related to market or anything. So myself, Lovelich Sharma, been practicing TA and basically quantitative analysis for the last few years. And we'll discuss in brief everything. So that is some of the awards and accolades. I think yes. So we'll come straight away to the our main point of concern. So sorry. Right. So this has been the overall scenario. Since 1959, that is what the you know political outlook has been. Now there has been many studies, there has been many uh, research, and there has been many uh, statistical evidence. So what I would like to point out here is something simple and right, if I can just give a pen. Okay, so this is basically a kind of a comparative electoral series and how economic and opposition has formed. 2008 was quite important because the incumbent party lost the popular vote. They did manage to win 133 or so seats, but then the percentage of vote fell drastically, and there was a percentage of vote. And actually, the thing is, despite an upward, you know, surge in the percentage of voted, they managed to have only a less number of seats. So we'll do some basic calculation over here, and I think we have taken a call on this and explained this previously as well. We have had a kind of a webinar on this as well. So if you look at the overall statistics, I mean, there are only two variables that are having a heavy weightage in last 5 or 6 uh, elections. I mean, in none of these, 6 variables, 4 variables were way below 56.5, and then there is a recent uh, things like one MDB affair, and then there is a Mahathir effect that is going on. So how would the market pan out? We'll have a detailed discussion. So you already know that kind of drop in percentage of vote in last elections, and these recent one MDB and Mahathir effect will of course have some kind of an impact, but statistics say only a different story here altogether. So we'll take last 6 variables. We can take all of these as well, but we'll focus till 1986 to keep data bit of like 30 years or so. So if you take in the effect and look at this as a particularly data, just a second, let me open the page for you. So if you look at the overall weightage of this particular data, I think this is somewhat 57.8. So you can call it the average is 58% over here in the last 30-35 years. And if you look at on the other side of the table, that is 41.5, 46.6, 24.8, all the way down to 47.8. So if you take average of it, it has been around 41.76, 42% of the vote. So somewhat the incumbent, we won't have. I'm keeping it sticking to the numbers is because I don't want to deal into emotions. That is why I'm sticking only into the numbers. And what is the data giving us? That is more important rather than what is feeling or emotion is giving up. So when you're into the markets, I face this issue. You are psychologically, you are having a cognitive trap that you are biased towards anything. So I wouldn't keep that as a factor while we are evaluating. So this particular data says that the average is 57.8 of the percentage of vote of the incumbent, while the opposition managed to be 42%. Now, even if the fact is I've taken 30 years is because in Malaysia, election is a non-event. First, someone comes in and tells that market's return has changed drastically after results. I think no, because it's a non-event. There are multiple factors to it. One, it has been the incumbent has been winning from 1959. The United Malaysian National Organization, which represents the Malay majority. So they have been winning, and the thing is that over a period of time, market has now taken election as a non-event. Now, since it's a non-event, the outcome or the surprise isn't reflected in the market. Now, what are the variables that will have an effect? We'll come on to that. So, basically, if this data is below the average, I am expecting the government or the incumbent to yes, I will come on to if the opposition wins. That is a very good question. We'll come on to that. So, if the incumbent cannot manage to go beyond 52.2, now that is the least variable that is available. Because if you look at overall this, there hasn't been clear trend in the data. First thing is that if you notice, the trend of the data should suggest that, for example, if you're looking at a chart, you're looking at higher top, higher bottom, or the lows are getting up, or the highs are getting down. So in this particular case, for the opposition to win, the difference is almost 15% of the average I'm telling about. It can be very less over here, but not too far ago, 2004, it was way too much. That is almost 20%. Now, despite having a higher voting percentage back in 2008, they were managed to win not more than, and they have to sit in the opposition. So the idea here is that given the current data, there is a difference of 15% of the average of the percentage of votes. Right. So 15%, and secondly, there has to be a significant change on the opposition side to win to defeat the current government, because they have been ruling around 58%, right? And of course, the recent all the meetings of just a sec, right? So okay, now we'll come on to the next slide. Now, if you got the point over here, that was the only importance that the recent data suggests that incumbent is winning. That is why it's a non-event for the market. Now, we don't care who is going to win or who is going to lose. What will happen for now is important, and what are the basic effects. Now, overall, it's a non-event because on the left-hand side, you have only the incumbent been winning since 1959. That is one. And second, they are having a 67.8 as a majority. If you add these variables, that's why I've taken only 30 years. Weight will shift to 59, and of course this might reduce, but this will overall keep the weightage of the percentage low to 55. Now, if you add all these lower variables that are way below 40, 42, 30, this will further bring down the average. Only there is one variable that might help improve, otherwise all the variables over here are below 40. So the point here is that the current data supports the incumbent. Now, what is basically the market behavior? That is more important, because as a trader, as an investor, you are more concerned about the behavior of the market. Now, this is one of the very important slides. Now, behavior of the market. Number one, you need to check that the results obtained reveal that out of 5 general elections, 40% of the time the stock market reacted positively before the elections. That is way before the election. 60% of the time the market reacted positively after the elections. Now, consider there are 10 times we have been into the elections. So I'm considering 6 times we have seen a positive result and 4 times before elections. Mind the words, before elections we have seen a negative, right? So before and after. Now the data over here suggests that 60% of the times we are positive after the elections. So one conclusion for an investor, for a trader who's looking for a, don't look at these points. First focus on these. Let us understand what does these 2 points mean. If you able to comprehend these 2 points, then there is a relativity of the next few points. Now, suppose if you are a trader who's taking a call on the market, you have one choice where you can invest before the election and that is only 40% of the times. I mean, out of 10 times, only 44 times market reacted positively. The numbers are not with you because they are below 50%. At least when you are trading and when you are investing, you need to have a probability favoring you. So probability is nothing 50-50. So anything above 50 is going to favor me. So when you say 60% of the time, market reacted positively after the election. That is one holistic approach one can look at, because 60% of the time market reacted positively after the elections. After the elections, it's not like a matter of 2 days, 3 days, 4 days. I think it's a matter of almost 60 to 90 days. Why 60 to 90 days? Let's come on to the third one. Because post-election 20-day period is more volatile than pre-election 20 days period. That's what the study says. Now, if you're looking at the chart, now suppose I'm going to put a chart in front of you, and this is KLCI, right? I'm going to erase all the drawings over here, and more drawing more. So I'm going to just highlight this, and this is the daily chart. So when you're looking at the market, and the point we made here is that post-election 20-day period is more volatile than pre-election. So if you think that this is higher volatility, no. I think post-election the volatility is much higher. Now, it doesn't mean that market will go down, market will go up. This is volatility we are talking about, right? So volatility can be on the upside, can be on the downside, but we know that it will increase after the election. So that is first thing. So we know that after the election, 60% of the time market is positive. Second, volatility is higher, can affect traders post-election rather than pre-election. So there is no significant surprise. That's what I said earlier. So what we can do is not look at a 20-day period to invest. Anyone who needs to invest needs to have. That simply means that market absorbs the volatility after election a bit late. Right? So one needs to understand that the returns may be positive, right? It can be positive. Sorry, I think that's drawing. I like to highlight a few points. 60% of the time positive after the election, but 20-day period post-election is more volatile than pre-elections. If you think that this is volatility right now into the market, no, this is smaller because the markets have higher volatility after the election. Now, that doesn't mean it will go down. It can go all the way up as well. So we'll look at the charts and we'll let the market tell us where it wants to go. Yeah, if you have any question, I'll come back to you in a minute. So, one, we need to know what is the market telling us. Second, we need to know the momentum is positive or negative. So that is two important things. First was basically the 57.5 and 42%. Need to understand anything above or below that can significantly affect the overall market movement. And one important thing for you to note is if the opposition wins, it will be an anomaly. Anomaly as in nobody would have thought of it, because markets, these data is breeded by the government, present government being willing. They are willing since last 50 years. So this data represents the current scenario. If it's other way around, you expect a high volatility. Now we already know that post-election volatility is higher. Your stop losses will get triggered. they will have a huge impact, and you might get a margin call. So of course, if the opposition wins, this volatility can be higher as compared to previous. So pre-election 20 days period is never a problem. Post-election period is. So, and also that, that there is no cyclical study that can be proved in Malaysian stock market. As we talk about US presidential cycle, the third term is the most profitable term, and it happens. It has been one of the best cycles in the last 150 years since the evolution of the market or DJIA. So that can be one of the best cycles one can trade, but there is no such relativity we have found in the Malaysian stock market. So there is no presidential cycle or this prime minister cycle we can see in. So this is the chart. Now we'll come on to the chart and we'll erase all the drawing. Now best way to look at the market and see what is the trend is you can look at higher top, higher bottom. Now, how many of you are practicing technical analysis or looking at charts? Just to know the audience, if anyone is looking at charts, and okay, I get few hands. Okay, so basically, when there is a noise, one should look at noiseless charts. The noiseless charts can be a rainbow chart. It's a clearly noise less chart, and it eradicates. So, for example, this is 185, so I can take 18 box size as just a percent, or I can take ATR as one of the factors. So anyway, so this is a Renko chart. Now Renko chart is simply like a chart which is devoid of noise. It doesn't take noise into its effect. So one can easily look at what are the levels that will be played out in the market. So one, I know that 1890 is on the upside, and second, I know this somewhat this particular level. So 1780, 1790. So these are the two important levels. Now, how come the analysis of this Renko chart is that if it's negative, the market is red. If it's positive, the market is positive. There can be patterns like, for example, this is a clear breakout of a channel and a trading range over here. And that is what we may see going ahead. So I think going forward, 1880 and 1890 is the range for the market. And since it's a clear double top, if you can see that we are seeing a clear double top formation. So 1780, 1790 is very important. If it goes below, then you must understand that it will be a double top formation, and we are going to go lower to maybe 1720 or 1680 levels. But any closing above 1890. So we'll just, that was a daily chart. Let's come at a weekly chart. Now that's a weekly chart. This is a clear double top. So as soon as 1890 is taken out, of course, I would want each and every one of you to go for a long side. I mean, this is a kind of a resistance that we are seeing in the market. Now, it's important for us to know if it's broken or not. So for now, I think the noiseless chart says that there can be a possible double top formation at 1890, and the first area of support is 1780 and then 1720. So we can expect that in coming days. And if not noiseless charts, let's look at candlestick charts and what is the pattern out there. Yes, see, this is the correct double top formation. Now that double top formation is above 1900. I mean, if you look at this charts, but if you look at candlestick charts, it's clear the double top formation over here. Now, if the lower supports, like I said, 1780 are taken out, we may be in for some much lower targets. One needs to look at 1750 as the point of support. If anyone wishes even to initiate any buying position, should look at 1750, 1740 as a lower, because you got a clear support coming in from the trend line over there. Now, that's about the KLCI. So, above 1890, it's of course everything will turn bullish, and that will be a huge uh, upside. Why? Because it's an overall shift in the trading range. I mean, since 2014, we have seen this range being into the market. Market hasn't moved. You need to understand, when the last time the range was breached, you look at this 1500 odd levels, when this was breached decisively, this one was the first recover. See how much it went up, almost 30-35%. And this is a one time event. So anywhere above 1900, we may see another increment by in market for high levels. And of course, I've said it previously as well, that overall pattern target of Malaysian markets is at around 2100, 2150. That's a very long term target. So overall momentum is like this. This is that's basically a channel that you can look at. So I think for this channel to sustain 1750, 1740 needs to hold. As I said, if that is not holding, that is not being held, I think we can go for a deeper correction. So for this market to stay upward, 1750 if sustained, we may see 2100, 2200 with no period of time. But if 1750 is not being held on to, I think we may go for a deeper correction in this market. So what are the sectors that one can look at? I think one sector which I was looking at is of course consumer. Uh, I mean, there's no doubt about it that this sector is looking at way too good return. I think last time I was in Malaysia back in January, I think this was that particular time that I said that it can go further from 637 to almost 720. That's another, upward progression in the charts, and I still believe that this trend will continue. One should not look at all the way upsides. One should look at possible corrections that can be utilized. Construction as a sector, I don't think anyone is gonna, hold on to. That's a monthly chart. You look at the weekly chart or daily chart as well. Short-term upward bias or short-term buying, anyone can do. But there's no point in investing in construction or these kind of stocks. I mean, look at it when you are trying to gauge the market and looking at what can be a possible sector that can add wealth. But this is certainly not the sector that can add wealth, because we have had the best bullish rally of last few years. And look at this sector since 2017, it has been down, or since 2010, it has been in overall trading range. This is not kind of a sector which can give you kind of a return. Consumer products, of course. Property, again, I won't, suggest you. I mean, has been in a downtrend since 2014, 2013. That's a clear double top. Overall trend is down. I mean, in a bullish market, you need to be with the outperformers. Now, what can be outperformers is industrial. Yes, look at this. Has been in an uptrend, if not as fast or as beautiful or as progressive as consumer, but even it's not slow. It has been fairly up. So there are sideways correction into this particular index. But when you talk about overall momentum, you see the kind of momentum it is. Now, even if not that kind of a return, in once in every 3 years, you see this sector performing. I mean, 2008, if you can take out this, because this was a systematic risk, goes up, consolidate, goes up, consolidate. What can be next? It might go up. So, I mean, industrial as a sector, given the industrial numbers that we have seen, one can look at. Technology, again, not a particular index that anyone would like to enter right now. I mean, it has seen a kind of a correction which I mean not everyone can take, because in just a matter of 3 months or 4 months the correction has been enormous, and these kind of probability distributions suggest the fall will be much deeper than what it looks like at present, because overall distribution suggests that I think this is just the beginning of this overall downtrend. Look at the steepness of this trend line. I mean, since 2016 it went up, but look at how it has come down. It took all the way 2 years to 1.5 years to go up, and in just matter of 3 months, 4 months, it came down almost by more than 50%, and we may see it completing back to those levels. So technology as a sector, something as volatile as that, you might not want to see. Financials, well, there are only few leading stocks in financials. Not every of them is giving kind of a return. I mean, it has been up, not as compared profitable to consumer. You look at the chart, but fairly well. So when I talk about financial, I mean, you need to go with the top three. So if I'm talking about financial public bank, but without a doubt, you gotta have a fat dividend over here. So it adds more value to the portfolio. And look at the breakouts. Whenever it takes out the previous stock, look at it, the way it appreciates. It makes stock, corrects, takes out the previous stock, goes on the exponential run, corrects, takes out the previous stocks from 20 to almost 24. So that's kind of a 24, 20% return. And on the top of it, you're getting dividends. So if this is these kind of charts, if they truly identify themselves as being value being unlocked. I mean, these you cannot apply much technical to it because it's a one-sided chart. It's in an uncharted territory. It has done every possible retracement of its previous trends. So you cannot apply Fibonacci extensions over there. The indicators or the technical indicators, they will always remain overbought in these kind of charts. So these is something a value play. These are something you want to buy and you want to gift it to your children, or maybe you want to invest because you want to pay some educational fees, or you know. Right. So you want to have a financial goal. So you hold on to these stocks for like 3-4 years, um, and then so second, I think just use the corrections in these kind of charts, specifically in financials. Maybank. I mean, it's not as fast because, of course, it doesn't uh, looks that attractive. But I think above this particular level of its previous top of around 10.7, 10.8, it looks surely bullish. And you've got a nice bottom formation over there. So whenever these kind of bottom is there, you see the way it goes up. So I think this will be a totally arranged play. And not the least, I'll put If you go by the total assets and market capitalization, I think public bank and CIMB, of course. But then there are OCBC and RHD Bank and so other banks available. But I think I would like to stay with the winners over here. So that's financials and consumer products. You don't have to search much. You have to visit only one share. This is one share that has given, oh my god, a fantastic return. So, I mean, any correction in this stock of more than maybe what 69 to 58, 20%. The worst correction I think is over here, and it's over here. So all the way from 24 to 12, 50%. You cannot get another chance of entering into a Nestle of more than 50. So that's a 20% correction, not more than 20. And you see the pattern. So 158 to 130, you almost see. That's a 20% again. People are going to buy it. Now, if we cannot afford that kind of course, return, stock that is day two. So one can look at basically consumer product as a sector and diversify among top 5 or top 10 shares to reap the benefits of that particular sector. So I think consumer, financial, and industrial, of course, are kind of sectors that one should look at. Any sector, any stock that is related to crude oil is gonna give you. So I don't think that all these stocks are there. But when you want to invest in something which has an exposure to maybe a marine or crude offshores and property infrastructure, you of course want to take basically outlook on a stock that is a conglomerate and has all those strength. So Keppel Corp is something which can look at current levels. Any dip in this stock is a pullback. You will have a target of around 9.9 to 9.8 in Keppel Corp, and it's basically a very long triangle formation. So at present levels as well, or till maybe 7.5, 7.6 cents, one should look at Apple Corp for a higher targets of around 9.9, 9.8 in the range. So that is one stock I can suggest based on the charts, while based on the event that we are having, I think it is a non-event because the volatility is played out after the 20 days election. So that's not the best time to invest for a short term, but for a long term, yes, above 1900, the market can go to 2100 without a doubt. And 60% of the times, of course, markets reacted positively. So if you have any questions, let me have an answer to you, and will end up this webinar due to the timing factor. So you can throw in your questions, and I will be happy to help. Let's see. We got a good question. Basically of full power. So I'll take a look. I mean, this is right now downward momentum, and it has actually come down to a very important point. So I think 2250, 2220 should be supported in prices. If it's supported, then it's good. If it goes below 2200, then be ready for a slide to almost 1500. But if it is able to support 2200, you might see it coming back to higher levels, not that aggressive to 2800, but to 25. So I think 2200 is a point of polarity. At present, mm, it is showing a kind of a rebound. That's kind of a hammer pattern. Might think that can take a support. So yes, at this point of time, if 2300, 23.5 is being held on to, it may see a short-term rebound to 2450, 2460. But overall, the trend suggests that it needs to come because it's a kind of a simple pattern that there is a shoulder, the head, the right shoulder, and there's basically trend line. So the breakout has been out of that. So I think this level will be utilized by latecomers to short again for a lower target. So that is one of the patterns you can look at. With the head and shoulder, there is a kind of a triangle. So I think 2500 is a very tough job for FCP to reach. And of course, as far as if it's below 2500, positionally it can go deeper. So that's AirAsia, these companies needs to understand that they need to hedge crude oil. One of the most important aspects of any aviation company is that they need to hedge crude oil very, very effectively. Otherwise, I don't. They tend to be cyclical, and they're good in maybe Chinese New Year time, but then they actually underperform because one of the highest cost of these companies are crude oil and jet fuel, and that becomes costly when crude oil is up. So when we see crude oil going above $70, we cannot expect a sharp price jump in companies like AirAsia. Though the trend is up and the momentum says higher top, higher bottom. So just for the short term, 3.55 is a very crucial support. It has been respecting this trend line from that time. So if it's about 3.55 for next couple of weeks and you get a close about 3.74 again, you might understand that it may go to 4. Otherwise, any price close below 3.55, you're in for a correction. So that is one perspective of AirAsia for me. This trend line. So that's around 3.5550 for an instance. If it's below that, I think it can go lower to 3.18 and 2.17. If it holds this support, see a kind of a rebound and the momentum will be carried up. Though with the overall trend, I think it should hold on to lower supports and come up out of the blue. 3.50 is the final point of polarity for AirAsia. So I think I've done. Yes, I've looked at the normal question market about up. If opposition win, we cannot ascertain, but 60% of the time market has been up, and 40% of the time market has been up before election. So this time it is down before election. I mean, if you look at present scenario, if you look at overall 3-month scenario, it's up. But last 20 days, if it's down. So you need to understand that for now, the momentum is not favorable for the bulls. It can be at lower levels of 1750 if the opposition win. If the opposition win, it will be an anomaly because the data we discussed is based on the scenario which has been since 1950s, and it has been only the incumbent party which has been winning. And Mahathir effect is of course there, but the data represents only the winning party that has been there for last 50 years. So I think if the opposition wins, then it will be an anomaly, and the data will suggest. And I've already shared the average voting percentage. You can get it anywhere. I mean, to understand, you need to look at average voting percentage of the favor of the which party, and you'll have it. So you must remember that post-election 20 days are higher volatile. You can take your stop loss and you can get a margin call. So don't force yourself onto the market post-election. Have a patience, and above 1900, I think it will be the safest trade to take a trade when the market reaches 1900. So you can play that another 10-20% of the value. I think that is all from my side. Yes, will come again. This time will come with some of the stocks. We'll let the volatility being absorbed into the prices. So we'll come again and take specific webinar on stocks that can be traded. I've given you one stock. Keep an eye on it. Keppel Corp, conglomerate, favored for the next down move. Anywhere price you get to 7.56, 7.55, add on to this stock. I think you can look at above 9 ringgits level in this particular stock. So that's all from my side. I'm Lovesh Sharma. You can reach me anytime if you want to, and I'll be happy to help. And we'll meet soon again. Thank you so much for your time.